dreams. I got a dream. Ooh, we building wealth and legacies. Ooh, we it's bigger than me. Ooh, we building the kingdom. Ooh, we now I'm free. Freedom ain't found in money. Freedom is found in grace. That's why I keep my faith in God and not that money I make.
What's going on, y'all? It's your boy B Weddles, and this is our part 2 series of the mystery of the British pound. Our first part, we went over EURGBP, and in EURGBP, what we did, we went with correlation, and in the correlation, what we did was we took EURGBP and we used it as a currency strength indicator, which was so powerful. Just like when you use the DXY and you see the correlation between DXY and Euro USD and GU and the dollar versus the pound and the yen and New Zealand dollar. You use the dollar index to give us a kind of an indication of what's going on with foreign currencies. When you see the dollar getting weak, you can see foreign currencies getting strong. In EURGBP, we use that as the same concept. EURGBP, what we seen was when the euro was getting strong against the pound, what we seen was the pound actually weakening against other foreign currencies. And then when the pound was getting stronger against the euro, what we seen is foreign currencies weakening against the pound. And so that's why it's the mystery of the British pound part 2, because you can't see this. And that's my whole concept with this, is I trade what you cannot see. I love the concept of how I look at the markets, because how you approach the markets, your perspective of the markets, that's what you trade in. You're trading your perspective. And my heart is to get to the truths as much as possible. And supply and demand is a law. Rather, if the market manipulation is real, but market manipulation has boundaries, and they have to keep it in confound ranges within certain price points. And the high of the day being set and things like that, different theories. But I believe that prices always move towards orders. And those orders is what the delivery of price, that's whoever's delivering price, whoever's controlling where price is going, they're going to where the order's at, and they're going to wherever the majority of the order's at. But they got to do it in a way that's diplomatic enough where there's orders long and short being filled above the high, below the low, and then there's areas where orders was placed that didn't get filled because orders was too big in a certain price point. And so we got to go back and fill those orders, because those guys are still waiting there, because that's their discount price that they want the British pound for. They might have exports or imports they trying to move around for a certain price point, and so their orders are waiting at this price. I don't know all the intricacies, you know what I'm saying? But at the end of the day, I'm looking for unfilled orders on the chart. And so what I'm doing with this is this currency straight indicator, CSA 5-step system. You go to the indicator, and I type in CSA, get straight to the point, right? CSA step scalp, that's the first one. CSA 5-step system is the second one. You see the downloads, very popular indicator. It has its strengths and its weaknesses, but the way we're looking at it, we're going to see which one you like more. The first one is the scalping system. The second one is more of a slower. So when it gets to those dotted lines, which is the extremes, those are extremes in the market. It functions just like an RSI. But our concept, we using EURGBP, we using price of the EURGBP, and we're using supply and demand of the EURGBP to scale the strength of the pound and what the pound may be doing, giving us an edge on what the pound could be doing against foreign currency. But when we throw an indicator on there, it gives us even more of I guess even a perspective. Like when we look at these charts, it gives us a perspective right away of what's actually going on. And we know when the euro is getting stronger, we're looking for the pound to get weaker. We're looking for the pound to get weaker. But we use that in correlation with supply and demand. We use that in correlation of where the unfilled orders may be. We use that in correlation of the structure of the market, because an indicator is telling you in reading price is creating structure. Price is creating waves. Price is moving in a Fibonacci footprint of the market. It's moving in waves, and so because the market moves in waves and cycles, then it creates a structure in the market. It creates a story in the market, and so we never leave the story of the market. We never leave the story of the market. We keep in alignment with the story of the market. So we don't never want to leave the story of the market. We always have to read what the market is telling us. The order flow. I love the concept of order flow. Order flow because order flow is it's the movement, it's the energy of the market. And so we have to capture the energy of buying and selling. From the time that trading began, it was created through energy. And so energy is what moved the markets. And so now that we live in a more technical AI system, there's still these systems are still built off ancient laws of energy. And so let's use this indicator to give us an edge on the energy of the market, so we can be and ride the wave of the market, or we can take our piece off the wave of the market. And one, just a snippet, the Hebrew letter mem is MEM, right? It means water and chaos. The symbol is the symbol of a M, or water. When you look up patterns and harmonic patterns, and you pull up those charts, it's the same Hebrew letter structure of mem, which is water, which is flow. And so what's dominant in the market is flow. We have to know the flow of the markets. And so that's what this indicator is giving us an edge on: the flow. What's going on with the pound? I need to know if it's at a supply and demand. I need to know where's the flow of the money. And so when we see EURGBP has a relationship like that, it gives us an edge. And so let's look at a few examples here, right there, right? So we have demand area here. This is a 4-hour chart. Come here. So now we see the pound. So when price goes up, that's the British pound. When price goes down, that's the Australian dollar getting stronger. Pound crosses up. On the CSA 5-step scalp, the first one crosses up a lot faster, right? We get a cross up, and you see the euro is already here. I really like the scalping one because it gives you a kind of immediate attention on what's going on, and this one right here is slower. So you get the cross just a little slower. You get the cross, but it's slower to reach those areas. Here, it's telling you, okay, it's time to get out, and you see this area right here. We got it, but here we have a cross. We see the pound is stronger against the euro, right? Here comes back into the demand zone. Pound crossed up against the euro here in this bar right here. Same thing. What's powerful about this, guys? What do you see? Can you tell me what you see? We have divergence. We got price making an equal low, but the strength of the pound making a higher low, right? Even though the euro is showing strength into this, it's showing strength and weakness. And here you have the same concept on the slower. And so now we got supply and demand zones matching up. We're looking for divergence. And we get right into this trade, guys. It's coming right into our block. It's coming right into our demand zone. A fresh zone. And then when you refine it, you see how price broke up, came out, retested. What did it retest? It retested that block. It came back and reclaimed that block. Something to pay attention to. And so here, that divergence right there, it gives us an edge, but it's giving us an edge in a totally different way. Now you can use the RSI and everything. You can probably get the same exact signal. What makes this more powerful is we're using a index. We're using the power of two different currencies, And we know that when the euro is strong, that the pound is weak. So we have a different perspective. And like I said, we trade our perspective. So when you got more knowledge behind your trades, it gives you more confidence. It gives you more surety. It gives you more money. And so here we got two equal lows. And what I've learned, when two equal lows are set, a lot of times there's orders below this low. Price comes down, run these two lows, right? Always remember that when you got two equals or two relatively equals, when you put that trade in, you want to put that stop loss right above there. And sometimes, if you're a trend trader, you're gonna go long there. There's orders always above and below price. The orders are being filled, but the orders are never at price. They're above and below price. And that's why the candlesticks move, because there's orders above and below current price. So when wherever current price is, there's orders above and below it. So when you have areas where there's not fulfilled, or areas where it may have set equal lows or equal highs, then you kind of can start thinking like, man, there's orders above and below this area. There's orders above and below this area here. When it hit this area here, eventually it came up here, but it came to these orders first. But let's go a little bit deeper into this. So here, I'm gonna use this block, this big down candle, a little bit different from traditionals. Can't really call it an order block. It's not an up candle, but I like this. I like these blocks in the market. You can just see it. But when price comes into this area, right? That's what we want to trade. We can scalp all throughout here. This is a 4-hour chart. We can take these same principles on a lower time frame. But what we want to do is pay attention to this. When price get to this area, what do we have? What do we have? We have a lower, look at this. Price is weakening. So the pound is the red line, right? The pound is the red line. We got it happening again. The pound making higher highs, but this make lower lows. Smart money concept right on the chart with a CSA 5-step system into a supply zone. Price comes out of that. We know the euro, and then we have a second confirmation of the euro crossing over in strength on that bar. When you know the euro is crossing over in strength, you can mark up where it be a break of structure and wait for price. Since the 4-hour chart, you can wait for price to come back to that break of structure here, or you can scalp it intraday here, because structure just broke. So you can just take that trade on London on the 14th. You taking that trade into this zone of take my profits, get out. Then on a larger time frame, I'm coming, and I know I got another trade set up that could possibly happen because it just broke this structure. It comes into the structure, sells off, and takes these out, take this orders out, right? When it comes back into the structure, what do we have? The pound gets strong, right? The pound is getting strong, but we have it in the oversold area. It's in the extreme on this area, and then it just makes a normal normal lower low in this area. So we didn't really get the divergence we wanted. Well, we did, but it's subtle, and it's a mini divergence. This is called a mini divergence pattern. It's when you get you see how price came, and it attempted to make the higher high, but it failed, and then that bar closed there. It was a mini divergence pattern. And then when it closed, it came down and ran those lows right here. So we got two different concepts here. The pound gets stronger. We got divergence on the pound. But we have it after it runs the lows. We got a block area. I like these blocks. There's a couple ways you can look at it. An area where you see buyers show up right after a big red candle. Just letting you know that they actually buying in this. They buying here. And so price comes in here. We have another divergence here. But also, this is probably the most the best part that I want to see, that I wanted to teach, because there's going to be times where these two, where the pound and euro converge, and when they converge, it's letting you know that that it puts the other foreign currencies in a contraction phase. And so that's when you know, okay, when I see these two moving and congruent with each other, you know that I need to either step out of the trade or I need to box up the trade in a contraction. It's in a contraction. And then when you see the expansion take place, you see here the euro, it gets weak. It gets weak here though. So you see how this how powerful this is? And when you backtest this, you see more. But you see how the euro crossed the pound way below the pound here before the contraction phase was even over. So now we know that the pound is getting strong against the euro before the price even left the area. It don't get no better than that, ladies and gentlemen. That's an edge in the markets. We got divergence, we have supply and demand, and we have when prices moving in convergence, it even gives you an edge when prices moving with each other, because now you can see the breakout on the strength of the euro or the breakout on the strength of the pound, and whether if it correlate with the foreign currency right away. And if foreign currencies is still in contraction, then you know what's about to happen before everybody else. I hope you enjoyed this. This is the Mystery of the British Pound Part 2. Remember, it's God first, family second, and trading last. And if we trade what we can't see, God bless y'all. Much love.
Look